Artificial intelligence tells us the secrets of stocks, a new technology that will make you win millions of dollars. Learn about it with us. First of all, my friend Sam introduces himself to you. I am Sam, an unusual artificial intelligence model dedicated to analyzing stocks. I will give you an analysis of the global stock market and how to become rich. You write in your comments how many % of my predictions were correct. Amazon, AMZN. Amazon is a dominant player in e-commerce and cloud computing, and it has a strong track record of innovation and growth. The company is expected to benefit from continued demand for online shopping and cloud services. Microsoft, MSFT. Microsoft is another tech giant with a diversified business, including Windows software, Xbox gaming, and Office productivity suite. The company is well positioned to benefit from the growing adoption of cloud computing and artificial intelligence. Alphabet, Goog. Alphabet, the parent company of Google, is the world's leading search engine and advertising platform. The company is expected to continue to grow its advertising revenue and expand into new areas such as self-driving cars and artificial intelligence. Apple, AAPL. Apple is a leader in the smartphone market and has a strong brand reputation. The company is also expanding into new areas such as wearables and services. NVIDIA, NVDA. NVIDIA is a leading provider of graphics processing units, GPUs, which are used in a variety of applications, including gaming, cryptocurrency mining, and artificial intelligence. The company is expected to benefit from the growing demand for GPUs as these technologies become more widely adopted. Energy stocks. With increasing energy prices due to geopolitical tensions and supply chain disruptions, energy stocks like ExxonMobil, XOM, Chevron, CVX, and Occidental Petroleum, Oxy, could see an upward trend. Healthcare stocks. The healthcare sector is generally recession-resistant, and companies like Johnson & Johnson, J&J, Pfizer, PFE, and United Health Group, UNH, could benefit from continued demand for their products and services. Consumer staple stocks. These companies provide essential goods and services that are less susceptible to economic downturns. Stocks like Procter & Gamble, PG, Coca-Cola, Co., and PepsiCo, PEP, could hold their value or even increase. Technology stocks. While technology stocks have experienced some volatility recently, some companies with strong fundamentals and growth potential, such as Apple, AAPL, Microsoft, MSFT, and Alphabet, Google, could rebound in the coming months. Industrial stocks. Industrials are a cyclical sector, meaning their performance is tied to the overall health of the economy. As the economy recovers, stocks like Caterpillar, CAT, Deere & Company, DE, and United Airlines, UAL, could see gains. Sectors with heightened risk of losses. Growth stocks. Growth stocks are often characterized by high valuations and rapid revenue growth, which can make them more vulnerable to fluctuations in market sentiment and economic conditions. As interest rates rise and economic growth slows, growth stocks may face downward pressure. Real estate stocks. The real estate sector is closely tied to the overall economic health, and rising interest rates can make borrowing more expensive for homeowners and businesses, potentially slowing down demand for real estate. This could lead to lower profits for real estate companies, impacting their stock prices. Small cap stocks. Small cap stocks are companies with a market capitalization of less than $2 billion, making them more susceptible to volatility and market disruptions. They may be more sensitive to changes in economic conditions and investor sentiment, increasing the likelihood of losses in the near term. Factors contributing to potential losses. Rising interest rates. The Federal Reserve is raising interest rates to combat inflation, which can make borrowing more expensive for businesses and consumers. This can lead to slower economic growth and reduced demand for goods and services, potentially impacting the profitability of certain sectors and industries. Geopolitical tensions. Ongoing geopolitical conflicts and trade disputes can create uncertainty and instability in the global economy, which can negatively impact investor sentiment and stock prices. Escalating inflation. High inflation can erode purchasing power and reduce consumer spending, which can hurt the profitability of businesses and potentially lead to losses for stocks. Supply chain disruptions. Ongoing supply chain disruptions can hinder production and distribution, leading to shortages and higher prices for goods and services. This can impact the profitability of certain industries and their stock prices. Economic slowdown. If the economy slows significantly, it could lead to lower corporate profits and pressure on company valuations. This could translate into losses for stocks across various sectors. Tech stocks. Technology stocks have experienced significant growth in recent years, but they may be more susceptible to downturns as interest rates rise and economic growth slows. Some companies with less clear growth prospects, such as Netflix, NFLX, Meta, and Peloton, PTON, could experience further declines. Consumer discretionary stocks. These companies sell non-essential goods and services, making them more sensitive to economic downturns. Stocks like Tesla, TSLA, Nike, NKE, and Starbucks, SBUX, could underperform the broader market. Real estate investment trusts, REITs. REITs invest in real estate, which is also sensitive to interest rates. As rates rise, REIT valuations could decline, leading to losses for investors. Some REITs, such as Prologis, PLD, and Digital Realty Trust, DLR, are more exposed to this risk than others. Small-cap stocks. Small-cap stocks are generally more volatile than large-cap stocks. As market conditions become more uncertain, they could be more prone to losses. High-growth stocks. Companies with high valuations and speculative business models may be more susceptible to losses if market sentiment turns bearish. Stocks like Rivian, RIVN, Lucid Group, LCID, and Robinhood Markets, HOOD, could experience further declines, potentially losing U.S. stocks within months. While there are some sectors and individual stocks that could potentially perform well within the next few months, there are also others that may be more susceptible to losses. Here are some factors that could negatively impact the performance of certain stocks. Economic slowdown. If the U.S. economy enters a recession or experiences a significant slowdown, some sectors like consumer discretionary, real estate, and financials could be more affected. Rising interest rates. As central banks raise interest rates to combat inflation, borrowing costs increase, which can dampen demand for loans and put pressure on companies with high debt levels. Geopolitical tensions. Ongoing conflicts or political instability could disrupt global supply chains, increase uncertainty, and weigh on investor sentiment. Company-specific issues. Negative news about a company's earnings, management, or product launches could lead to a decline in its stock price. Here are some examples of stocks that could be more vulnerable to losses in the coming months. Consumer discretionary. Companies like Tesla, TSLA, Nike, NKE, and Home Depot, HD, could experience lower demand for their products as consumers tighten their budgets. Real estate. Homebuilders like Lennar, Len, and Toll Brothers, TOL, could be affected by rising interest rates and slowing home sales. Financials. Banks like JP Morgan Chase, JPM, and Bank of America, BAC, could face higher defaults on loans and increased pressure on their margins. Emerging market stocks. Investments in emerging markets could be riskier due to potential currency fluctuations, political instability, and economic downturns. Potentially profitable Arab stocks within months. Saudi Aramco, 2,222, as the world's largest oil producer, Saudi Aramco is likely to benefit from rising oil prices. The company has a strong balance sheet and a healthy dividend yield, making it an attractive investment for those seeking stability. Etisalat, 7,030. Etisalat is a leading telecom operator in the Middle East and Africa, and it is poised to benefit from the growing demand for mobile and internet services in the region. The company has a strong track record of profitability and is expanding its reach through acquisitions and partnerships. Mubadala Investment Company, MUBA, Mubadala Investment Company is a sovereign wealth fund of the United Arab Emirates, and it has a diversified portfolio of investments in various sectors, including energy, technology, and real estate. The company is well positioned to capitalize on the growth opportunities in the Middle East and North Africa, MENA, region. Abu Dhabi National Oil Company, ADNOC. ADNOC is the largest company in Abu Dhabi and one of the largest oil and gas producers in the world. The company is investing heavily in its upstream and downstream operations, and it is expected to benefit from rising oil prices. Egypt Kuwait Holding Company, EKH. EKH is a diversified investment company with interests in various sectors, including banking, insurance, and real estate. The company is well positioned to benefit from the economic growth and reforms taking place in Egypt. The 10 best stocks to profit within 3 months. Microsoft, MSFT. Microsoft is a diversified technology company with a strong track record of profitability and growth. The company is well positioned to benefit from the growing demand for cloud computing, artificial intelligence, and other software solutions. Alphabet, Google. Alphabet is the parent company of Google, the world's leading search engine. The company is also a major player in the cloud computing, advertising, and hardware markets. Alphabet is expected to benefit from strong growth in these areas. Apple, AAPL. Apple is the world's largest technology company by market capitalization. The company is known for its innovative products, including the iPhone, iPad, and Mac. Apple is expected to continue to grow its market share and revenue in the coming years. Tesla, TSLA. Tesla is a leading electric vehicle manufacturer that is also developing self-driving cars and other advanced technologies. The company is expected to benefit from the growing demand for electric vehicles and self-driving technology. NVIDIA, NVDA. NVIDIA is a leading maker of graphics processing units, GPUs, which are used in a wide variety of applications, including gaming, artificial intelligence, and data centers. NVIDIA is expected to benefit from the growing demand for GPUs in these markets. United Health Group, UNH. United Health Group is the largest health insurance company in the United States. The company is well positioned to benefit from the aging population and the increasing demand for healthcare services. Procter & Gamble, PG. Procter & Gamble is a consumer staples company with a strong brand portfolio, including Tide, Pampers, and Gillette. The company is expected to benefit from the stable demand for its products. Coca-Cola, Co. Coca-Cola is a beverage company with a global brand presence. The company is expected to benefit from the strong demand for its products around the world. PepsiCo, PepsiCo is a food and beverage company with a strong brand portfolio, including Pepsi, Lay's, and Quaker Oats. The company is expected to benefit from the stable demand for its products. Caterpillar, Caterpillar is a heavy machinery manufacturer that is well positioned to benefit from the improving global reach and developing new products.